Hi friends, welcome back to the channel, and this is your daily news. So I'm hanging out at mom's house. I have a lot of things to share regarding that, but I want to do some daily news first, and well, let's just jump right in. So first, guys, the big story is Nvidia. What the heck is this thing doing? It seems to be holding. I want you to just take a look at the chart for yourself. So it's up 127% on the year. That's essentially probably one of the best big market caps stocks right now. But it's going parabolic, and it's funny because Wall Street's now having to jump on board with new price targets. You guys can see right here. So yesterday, what? You say Roosevelt Securities like, it's a $600 stock, and Barclays, no, this is a $500 stock, and then like Jeffrey's like 472, et cetera, et cetera. Personally, I think this is all BS, because sometimes the analysts sort of have to cover their butts in a way and sort of like say, oh yeah, I see, I told you all along it was going up. So it's kind of ridiculous if you ask me. And you take a look at the headlines, which is really, really funny. Read this here. Nvidia short sellers lose 2.3 billion in one day as stocks soar. So I kind of feel like this is essentially a lot of crazy movements and a lot of crazy big bets. Now, true story, I was talking to my mom saying, hey, Mom, look at this news. It's really funny. And she's like, what are you laughing at? And then she reads the headline, and she's like, this is like game, isn't it? It's really funny because I was like, yep, Mom, that's exactly what it is. So she actually, she doesn't necessarily know everything about Nvidia or anything of that nature, but she does understand and is smart enough to know that literally this is just a big game. And I said, Mom, basically what this is a game that just, rich people play with each other. And if you take a look at this chart, essentially, look at this, guys. So people are betting against the stock, right? They're shorting it, and they're saying here, short bets are down $8.1 billion. This feels pretty squeezy to me. I mean, for like a $1 trillion company kind of thing to just go up this much, 20-some% in a day, seems a little bit weird. And we'll see if this continues, but as of now, it's holding. I was thinking it was going to dive, but who knows what it's going to do. It's probably shorts covering is my guess. It's like a PE of 200. So if you believe Nvidia is worth it, please let me know. Let me hear in the comments. PE of 200 seems kind of crazy. So that's the name of the game, but you heard it here first. My mom thinks it is a game as a total. Speaking of games, this is an interesting one. You read the headlines on this one. First Republic's $35 million banker out-earned JP Morgan's diamond before the bust. So there's essentially a higher salary over at First Republic than JP Morgan, which is kind of crazy. Essentially what it is if you're giving people incentives to, give out loans, this kind of stuff, they'll do it, right? You essentially have a moral hazard kind of situation. I mean, obviously the bank failed because you're just giving people so much incentive. Like you keep lending out money and making those deals, right? Getting those fees. But if you look at this chart here, look at this, guys. So First Republic, right? So this is the sort of compensation per employee in 2022 was $310,000. So that's higher, nearly actually over double of JP Morgan, higher than Morgan Stanley, and just about the same as Goldman Sachs. That's the kind of money that we're talking about being thrown around. And that certainly reminds me of like a 07, 08 kind of bubbly sort of situation. So I thought that was a really interesting one. And I'm talking about bubbles, on YouTube, you guys know, and we talked about this in a previous video, but I just want to reiterate this over and over again. A lot of times on YouTube, they like to say, hey, real estate, you just can't lose because everyone needs a place to live. In fact, you can lose everything in housing, just like you can lose everything in stocks. It's a real thing. You can see here, read the headlines. Apartment landlords bleeding cash imperil 47 billion of loans. And they had a really interesting description of sort of what's going on right now. I want to go over it with you guys and kind of go point by point. So it's saying here, high interest rates and surging expenses are erasing their profits, right? So the idea with a lot of these people is they're like, okay, interest rates are low. I got that free money. I'm going to take that free money. I'm going to buy an apartment building. I'm going to rent out all the units. And if there's any problem, I'm just going to raise the rent, right? The issue is right now, you guys probably get this. The more you raise the rent, you start to lose demand, right? It's because you got to find people that want to pay those higher rents. And then when the interest rates go up, depending on how you structured the loans that you took out, you might be starting to be underwater. And then the issue becomes if they raise up too high, and then you can't find anyone to, fill up your units. I think you guys get the point of this. Now, yes, you could fill up the units that you have rented out, but you'd have to maybe charge lower rents to try to attract them. But basically, the math doesn't work out for some of these people. Moreover, which is quite interesting, imagine that you have repairs that you need to do, right? That's kind of screws up your math as well. Insurance premiums also change. And so basically this whole rents thing that like assuming that everyone's going to come and pay those high rents, and you're also miscalculation of interest rates. On top of your value of your properties that you bought could have been at elevated levels, you're like in sad shape, right? So you guys know this. If I buy something, just for example, I buy something for, $10 million, but now it's only worth, say, $8 million, I'm underwater on that, the value of the place, and I can't get people to rent it. So basic gist of it is you can lose on real estate. It is a thing. You take a look at this here. So this is a multifamily chart. You guys can see it here. 2022, you definitely see the peak there. In 2023, you start to see a dive down. We also know that commercial real estate is hurting as well. You have all of these things in play. Now, my personal feeling is that when I ever look at the markets, I just feel like, what the heck are you guys thinking out there? I mean, interest rates are still elevated. You see the situations to where personal consumption slash credit card debt, these kind of things, personal debt is skyrocketing, right? So people essentially have to pay, just their daily expenses, your bills and groceries, these kind of things, and pay with all their credit card. It's like 38.5% of Americans can't afford their basic living expenses. And so I think this is a problem. And you're sort of putting this all together. It feels like there's still a bit of a bubbly sauce out there in the AI stuff. It's been certainly starting to crash in some of the banks, but now we're starting to see it in some parts of real estate. So in this particular instance, we're talking about the article today, was multifamily homes, but I still think there's more pain in the commercial field. Now, this is actually a true story. I'm in Baltimore, and on the way flying out, there's a gentleman sitting next to me, and he was actually said it was a project manager, and he was working on a commercial deal. And the basic, just what I thought was really quite interesting. So he was working on more of like the strip mall one, and we had talked about that. And then the other gentleman on my other side, he was telling me all about cybersecurity. So one of the things that I'm just sharing with you guys, it's funny how I do the news every day with you, and then it's cool to run into people who are, kind of into these fields, and I, get different opinions on these kind of things. And the things that I've learned, and this is something that I'm just sharing with you, is that in our community, we have all sorts of great and cool people, and it's great to share info with each other. So sort of the special info that I have for you today is be careful out there. Please be careful out there. My mom, according to my mom, man, she thinks it's all a game. So it is what it is. And as you know, if you're short on Nvidia, it seemed like it would be the right bet, right? It would be. And I still think it is, to be perfectly frank. But if more people decide to bet on the long side and they essentially bet you, it is a game. So at this point, it's a game of chicken. And if you've over leveraged to try to short yourself, you're kind of in a bad way. It's the same way that if you over leverage in the apartment thing, right? Maybe you bet wrong temporarily because, like, theoretically you were right at a period, but you sort of got to know when to jump off the bull. And that's how you got to look at these things, is that it's all fine and dandy, right? When you're riding the bull and you're making that money, you feel like you can hold on. But then some ways, like essentially when you raise the interest rates, it's like ratcheting up the speed of the bull. And then just, you're trying to hold on for dear life. Ultimately, it shakes you off and you really could get hurt. So love to hear your thoughts on any one of these stories. I do appreciate you guys watching. I'll try my best to get some more videos about like what's going on with my mom and stuff like that. A lot of really cool stuff, to be really frank, and just a lot of special time. And so I want to try to spend as much time with my mom as I can. But right now we're taking a rest. She's watching some TV, actually. But honest, it's actually funny, true story. She watches Chinese shows, but translated into Vietnamese, which is a funny thing in itself. But I'll share more of that as we go. So thanks again for watching, everyone. Love to hear your thoughts, and I'll catch you in the next video.